My name is Luis Gazitua. I'm one of the partners at JAG Insurance Group. John Michael is one of our agents.
Yes.
Well, we work together. John Michael actually insures the agent for the Center. For the Center for Social Change. So, which is actually a perfect example to kind of back into. I mean, we understand nonprofits specifically, you guys have so much stuff to worry about, right? As far as sponsors, donors, keeping your donors, staffing. There's so many things you need to worry about that insurance is kind of not one of the something you don't want to have to focus on so much. But we feel that nonprofit programs specifically, they're very underserved. Number one, in the insurance world, there is a nonprofit programs that exist. And why it's important, because you have kind of these underwriters who really understand a little more how to, really your potential landmines. But every nonprofit, even though it's this general type nonprofit name, like you guys are all still so different individually, right? So everyone's, it's not the same. Sometimes you'd see when you've gone through this process that even the application process could seem very exhaustive, right? Kind of like how to figure out who to do what and where. We've just been able to basically be that resource, right, for you as a nonprofit to figure out what you need, pricing being important, but not just short term, but long term. A lot of times when you're starting, it's price being the most important thing. Is how do we kind of develop and structure a program to get you what you need now, but also maybe discuss future contracts, whether you're working with certain municipalities or federal funding. All of a sudden you get this new potential contract, but the insurance requirements are coming down from somebody up top that really make no sense. They're not even, it's very excessive, especially for some of the smaller nonprofits that start up, that either you're not going to buy it, you can't afford it, and it'll be a deal breaker. We've had some success actually fighting back on some of these insurance requirements, as far as making them a little, basically being the liaison of understanding of what you have, what your risks are, and explaining it to sometimes some of the bigger risk managers. As far as insurance goes, we'd like to kind of open up the Q&A. I can talk specifically, technically, as much as possible. John, I talk a lot, so I don't want
to. Back to what he was saying, that every nonprofit has different exposures. So we can sit here and speak on a broader term, but at the end of the day, it's important for you to understand and get with your agent, and speak on the different types of liabilities that will pertain to you, because not everything will pertain to you. You will need everyone's different, and although nonprofits, the coverages that they have are, for example, for exactly the same coverages for a profit type of business, but at the end of the day, it's all different, and it's very unique, and it's all about getting with your agent and coming up with a plan, coming up with a program that best suits your needs.
So as far as insurance goes, regardless of the size of your nonprofit, if you are insured currently, I mean, and in the pamphlet is something with, Philadelphia Insurance Company. They're the largest nonprofit insurance provider in the country. They literally have a program from minimum premiums to the largest nonprofits. That's who we use. I mean, I'm not saying that's the only person available. If you have them, there's a good chance you most likely have the bells and whistles you need. And if you don't, there's something we can always discuss. So our job would be moving forward to be a resource for you guys to kind of discuss what you need. So anything as far as, sometimes sexual abuse molestation coverages, which aren't automatically included, higher non-loan auto. There's a bunch of other things that can be either excluded or included. We can kind of help navigate that. But just next time insurance comes up, if you think you are with Philadelphia, you're probably in the right spot, unless you're doing something different, whether you're hosting maybe more special events. So it could be kind of, this is just to kind of gauge and be a resource as far as conversation and having a conversation. I mean, one thing that comes up a lot is D&O, so directors and officers coverage. So I'm not sure if you know this, but anybody that's volunteering on your board, everybody on the board is personally liable for decisions they make on behalf of the association, right? Well, volunteered or not. So D&O is probably what we lead in most with, as far as anybody on the board. Sometimes whether we need to make sure they're protected as far as the work they're doing for the nonprofit. So a couple landmines when you go into that type of coverage is, again, if you're with, insurance is very general, and sometimes you see insurance programs kind of chopped up, meaning you have 5 different coverages, but 5 different carriers, maybe one agent, but everything is kind of spread apart. D&O, you should always look for whether defense costs are included or excluded in the limit of liability. So what costs money on insurance is not necessarily what they pay, but what it costs the insurance companies to defend you, right? So a lot of times, 95, I think it's maybe higher, I don't have the math in front of me, but usually about, say, high 90% percentile, the claims brought up against the nonprofits are frivolous, right? But insurance companies have the duty to defend. So within that, they're going to defend you regardless if anything were to arise for what quote unquote an accusation. The most important part with that is the defense cost being outside the limit. You could be in court drag on for 2-3 years. Those defense costs are not going to affect the $1 million of coverage you have on board. If they were included, you could be in court for, say it costs $600,000 over a 3-year kind of lawsuit. Yeah, sorry.
Did you say that anybody that works in a nonprofit, or just the directors?
The directors and officers are going to be personally liable, right?
Okay.
Right.
But
And the board members
Board members, yes.
are liable, so it is whose responsibility to ensure the person itself that's serving in the board or the organization?
So it's as far as, okay, so the organization would be the first and foremost, because what's going to happen is the organization has the coverage. On the D&O coverage, your policy will indemnify. Did you know?
I think what you're saying is fundamentally wrong.
Okay.
Florida's got a statute that says directors and officers are immune unless they commit a crime or are reckless in their responsibilities. Other than that, you're immune.
So
The point that you made that I think makes sense is that you can be sued, you have to prevail on the immunity. It's the cost of defense that's critical.
Correct.
The likelihood of you getting a judgment against a director or officer is very remote in the state of Florida.
Well, correct, and that's what I was kind of back into the point of what's going to cost money is if you don't have the D&O, it's the defense costs, hiring an attorney, going through that process. But the D&O coverage automatically drops down and identifies any board members. So you don't have to list any board members, new board members, past board members. You know, something about that D&O coverage is that it also has, it's a little different than a general liability policy, where the day you establish coverage, you establish what they call a retroactive date. So the retro date of when you establish the policy could go back as far as the inception of it, 4, 5, 10 years. It'll pick up basically past, future, well not future, but current and past board members as well. I mean, the key here is to be able to defend, because you're right, you can get sued for anything. The point of insurance is to kind of mitigate that risk and make sure that you don't have to deal with that headache on your own.
You said no future.
Well, I meant
new director.
They'll be covered. I meant future for the future claims, but your D&O, as long as this continues in force, will pick up coverage retro and then current.
You have to advise, like if you have new officers or directors, is there a schedule?
You do not. You do not. Officially, you do not. What will happen is it is renewed every 12 months. So what they do ask is on the renewal application, list the members as well. But it won't. You don't have to notify that's happening between the policy period. Correct. You know, one thing too, and going back to on the D&O and some of these niche coverages, these D&O programs for nonprofits, EPLI is something that's kind of popping up a lot, which stands for Employer Practice Liability. Again, these are kind of the stuff that you buy coverage for third parties. But a lot of times with staffing issues and turnover, there is a potential risk for past employees or you know, for wrongful termination, sexual harassment. You know, now they're even having those employment issues. You could also mitigate by adding that endorsement to your D&O coverage. So those are some things that are happening a lot.
These coverages look, I mean, they're basically the same as a for-profit. Are the costs similar?
I mean, it's the same type. Right, for-profit, non-profit. The risks are the same. It's just what happens is some of these non-profit insurance programs they are going to be more competitive. Usually, and insurance can be general. So we could talk about there is considered general liability, but finding, depending on your specific exposure, what you do for a living, there are certain insurance programs that because they understand it better, they underwrite it better, they're able to get a better pricing. So with them, for example, yeah, and it becomes kind of a la carte where you can kind of pick and choose what you want to insure. But usually they'll be the most competitive. And if one big issue that comes up too, just to think about down the road, and this happens a lot with insurance requirements. Again, sometimes it's the insurance requirements that are the biggest hang up, right? You bought insurance, you think you have everything done, it's suffice for most, but maybe now you're doing a special event or you're getting a new contract with somebody. something called higher non-owned auto coverage. So a lot of times, if you have a commercial auto vehicle, that coverage would extend. But sometimes you'll see it on a insurance requirement, like I need auto coverage, but you don't necessarily own a car. You should be able, the higher non-owned auto, what it does, it covers the nonprofit or the organization if someone's doing any work under their vehicle. So let's just say, for example, one of your employees is delivering food to a client or going to see a client or even going to the bank to make a deposit. Technically, if they were in an accident while they were driving under the working environment, you do have an exposure there. It's not a big exposure. It's not it's not a delivery or a courier service. But sometimes I've seen that huge hang up. It's not expensive. If you're with the right carrier, you can add it. But it happens at least once a month where now it wasn't something that was included. And now usually any venue that you're going to go do an event at, that's a big stickler now. They've had some issues with people driving onto the property. And what that does is it basically takes away the assumption that people have their own personal auto coverage and they're going to hold, they basically want to hold the entity liable for that. So that's something that pops up a lot.
And you're referring to when employees drive personal cars?
Correct.
Not the organization?
Correct,
Okay.
correct.
Is it the same for volunteers?
Yes.
Yes.
Same for
Yeah.
volunteers.
I mean,
Volunteers, employees.
it's anybody, again, this is, the reason why we have that coverage is because you could get sued for it. There's more attorneys looking for ways, right, to get it. That endorsement's usually really inexpensive. It's about $150 a year to add it to your liability policy. It's just not automatically included, and usually it's a big oversight, but checking that box off really just covers the entity, and it'll take away that assumption that everybody is up to date on their auto policy, or they even have enough insurance too. One thing about you mentioned 4 more employees, just as far as workers' comp goes, state law says if you have 4 more employees, not including any officers, you're supposed to have workers' comp coverage. So that's kind of the rule of thumb, whether it's full-time or part-time. Keep that in mind as well.
We rent space here at the center for our office, and so obviously the center has a policy and we have our own policy. How does that work as far as like what they're responsible for, what we could be responsible for if, I don't know, in case of hurricane or a fire or something like that?
Well, so anything that you, so as far as,
Or an event, yeah.
well, so it depends on who's having the event,
Yeah.
right? From a liability perspective, like you, again, you're responsible for what you're involved with, right? I know there's multiple insurance
like
policies.
office space.
It'll be your office space. It'll be your own personal property. I mean, you'd have to, if something were to happen, let's say and you have it insured, when there was the break, your stuff got damaged, your policy would pay out. The only issue that would happen, and it's something called, I don't want to get too technical, but subrogation, for example. Let's say you guys, for whatever reason, did get sued for something in this office. You had somebody come in, there was an altercation issue, and then your insurance company were to actually pay out and defend. But for whatever reason, they felt that maybe the center was liable for something, then your insurance company would have a discussion with their insurance company. But whoever gets named first, your insurance company is always going to respond first.
Yeah, and to add to that, like for example here, I know there's some sub-leasing, that happens, and if that's the case, you would have to have your own policy as well, because if you're leasing from, let's say, the center, then it's your responsibility to have your own policy as well too.
Yeah.
None of our members sublease. Everyone they have membership agreements.
Okay.
So it's like they're not subleases.
They're not.
Okay.
Yeah. And I
But we
know-
still ask them to have everyone should have their own policy.
Right,
Sure.
Right.
In case that makes a difference in
I mean, what it does is just, it helps the center. It just creates if something were to happen, it just creates a buffer level of protection. That's all it is.
So if, let's say there was a break-in, just as a scenario, there's a break-in here, but then they break into another office, and let's say steal something in that office, is it our insurance that would pay for them, or it would be their insurance because it's their property?
It's their property. Just look at the insurance, whatever insurable interest you have, that's who the policy is going to pay. If it's your equipment, your stuff, your policy will have to pay for it. Okay.
It says on here something about insured for funding sources. What does that mean?
Well, so as far as you could buy a fiduciary or crime policy, which will be embedded. So let's just say if you wanted to insure any cash, any receivables you have. So it's basically you're covering for employee theft from the funds that you have. So you could buy a kind of, and that'll cover stuff, anything from forgery, any issues that would come arise from the cash on hand or money you have in the bank. You could pick up that coverage as well.
And that's a separate.
Well, it's included. It's part. You're able to, again, on some of the stuff that we would offer, it would be a la carte. Like we'd offer you everything, and then we go line by line of what the expense is, and you can kind of pick and choose what you want to buy or not. Something else I want to talk about too is sometimes there's a big confusion about what we consider liquor liability. If you're hosting any events, but there's a difference between being host liquor and then liquor liability. So host liquor is included. Unless it's specifically excluded, I'm going to assume 99% of the time you have that coverage. Host liquor would be as if you're offering any beverages at an event for no profit, right? You're giving, it could be included in an actual ticket where you're hosting an event, they RSVP'd, and you're serving, whether it's wine or beer or any refreshments. Host liquor is included. But if you're selling anything for a profit, it's just a cash bar, or you're collecting revenue for alcohol, you have to have a separate liquor liability policy. This comes up a lot when you're hosting smaller special events. Like if you want to host an event at a school or anywhere else, that's where, and someone's, if you're offering it, you're gonna be fine. You should review that. But if you're selling it for a profit, then you have to have liquor liability.
And do you get that for each individual event, or do you get that blanket for the year as well?
So that's a good point. Depending on how many events you're gonna have. Usually events should run between $250 to $350 a year. Depending on the limits, if it's $1 million, kind of the basic limits, about $250 to $350. Some of the nonprofit packages, like Philadelphia, for example, I'm using this company for an example, you're able to kind of add a blanket special event coverage. So you just pay a flat $500 fee embedded in the premium, and then you don't have to notify the carrier. You can have just small events, big events down the road. A lot if you think that's going to happen, it's probably better just to put it up front. Then you have that budgeted fixed cost throughout the year. And you could hold this, right?
For every single.
Well, okay.
Yeah.
Or you could do a blanket too, I
Or
think.
you could do blanket, right? So,
But it depends on how, if you do one event a year, it won't make sense. But if you're hosting smaller, you might pay that little extra money up front. You'll save it down the road. The sexually abusive molestation, depending on what you're doing, should be something you should pay for. It's a small endorsement, but it is excluded. I mean, again, this is duty to defend. Most of the times, especially if you're involved with children, you can get anybody, disgruntled parent, who has, and it's happened a lot, who has just some bad experience. If you don't have that coverage, your insurance company will deny it. And you have to pay that money on your own to defend yourself. So be on the lookout for your liability policy just to have it included, especially with children. But going back to doing any outdoor activities, if you're hosting any outdoor events, for example, camps or anything like that, you can also have the ability of including participant medical coverage as well. So if you're hosting a youth, I'm not sure, a cheerleading camp, a softball game, anything of that nature, you could buy some sort of coverage in case any of the spectators or participants were to get hurt. You don't have to. They can sue you for anything. They would have to prove it, but you could extend coverage to any of those events for that as well.
And that would be on an event by event basis, or you just?
It would vary. Yeah, if you bought a blanket, it would be embedded. If you're doing each special event individually, you just kind of want to check that box off.
So if you didn't have the medical part that you talked about,
Mm-hmm.
and someone did get hurt and they sued you, you would be in a bad place.
Well, think about it this way. That's why you have insurance for it. You would just be going above and beyond.
Okay.
So they would have to sue you. The insurance company will defend you.
Okay.
It's just one of those things. Those limits are usually very kind of economical. Like you could buy coverage for $5,000 per person.
So it's more like if you want to offer that for the people that are participating
Correct.
in something extra.
Correct.
Like if you know that your participants don't have good medical coverage,
It would be a nice gesture, right? Where just to cover where if someone broke their ankle and they get a bill from the hospital for $5,000, you can buy minimal coverage, but it is a good gesture.
Yeah.
It's almost like it's good faith.
So with our certificate of liability insurance, so there are quite a few number of donors that ask for them to be listed as the certificate holder.
Okay.
What does that mean?
It's a good question. So a certificate holder, in essence, is just showing proof of insurance.
Mm-hmm.
There are sometimes where someone's going to ask to be an additional insured, which is different. An additional insured, there might be a cost associated with it. A certificate holder, I just want proof. An additional insured, they want to be indemnified on the actual policy. So it'll be different.
Okay.
A certificate holder is just they want to some sort of proof. They don't want the 100-page policy for Philadelphia. They just want a one sheet so they can track themselves, effective dates, coverages, things like that.
But why would a donor want that?
Just proof of insurance. If I'm
Like
gonna-
the county did.
Like
is that
Miami-Dade
right?
County
The
requires
county
that,
does it, the
any
city does it.
municipality.
Right, yeah,
Right.
any county park, you're gonna have to.
But they wouldn't be listed, right?
They want to be listed.
So that's
So how do you-
that's an additional insured. There's two different things. Certificate holder is just proof. Additional insured is like the county, for example. If you're doing anything at their parks, yeah, they want to be listed as an additional insured. So that way, if you guys get sued, them being additional insured, they can piggyback on your policy.
And
Well,
does
yeah,
that
our-
cost something to add?
It can. It's very similar where if you, it's usually $150 per additional insured, but if you have multiple people requesting it, you could pay almost upfront $500 included, and they do something called blanket, and you could ask for $1,000, and it's not going to cost you anything.
Yeah, ours says the certificate holder is named additional insured.
Okay.
General liability.
So
Funding source.
right, so they're indemnified on your liability policy.
When I worked with the nonprofit that had a food truck, every time we went to a different location, it was multiple a week.
Right.
The people usually wanted to be listed as additionally insured.
Right.
And I think whatever their policy was, it wasn't $150, but also wasn't free. It was maybe like $25 or something cheap.
It depends.
something like
Some
that.
companies are different. Yeah, but in that case, the food truck's coming. What if the food truck runs over somebody? There's an issue happens. They just want to make sure that when they sue the food truck, they're covered under as well. Yeah.
I just hosted an event and I didn't have to get specific event insurance, but I know you talked about that a little. Is that just the same as general special event insurance? Or
So depends
I
on.
think it was the venue that wanted that.
They usually do. You just gotta, depending on who your insurance provider is, if there is coverage for special events. Some specifically exclude it, some cover it automatically, depending on what the event is. So like if it's automatically included, you can indemnify, you can add additional insured location, it's covered. If they exclude it, you might have to get a special event policy. The problem is sometimes if you're going to some of these bigger venues, it's just they're asking for such ridiculous stuff. Like if they're asking for a $5 million umbrella, it doesn't make sense to add it on your policy because you're covering $5 million over the whole scope of business. You might have to buy a special event and just buy these ridiculous limits to suffice for that landlord, if that makes sense. So sometimes special event policies, even if you have it and they're asking for stuff that makes no sense, it's just too expensive to include it, you can just do it one-off on the side and it'll be less expensive. When we insure your nonprofit, I'm not in my opinion, right, a lot of times they'll focus on some of your tangible stuff, like your computer, which is important, things that could be damaged. But I think your biggest issue is the non-tangible stuff, right? Like what could put you out of business? What can stop your nonprofit? And because of that, I believe strongly in insuring for the unknown loss, like the lawsuit of someone suing the board, right? That headache, a cyber issue, cyber liability. So all those things that could really just halt you from really growing your nonprofit, that's usually the lead-in, and that's what we focus on a lot. And then we'll back into, because you can replace the laptop. You can go to Best Buy, we can figure it out. But a huge lawsuit where you didn't have the coverage, and now you have the grace of attorneys helping you out. You want to take that away. So it's really just having those discussions and looking at it, not getting just what my lease requires. Usually that happens too. I get it. Cash flow is the biggest issue. It's a new, I need it for my lease. I just started. I need cash flow. That's kind of where we see all the gaps in coverage.
What was the ELPI? Maybe you
EPLI. So you buy insurance for third parties, but your employees, again, this is unfortunately where we live, but they can sue you for various reasons. Whether it's you got to be careful on wage and hour issues if you're paying them salary, and overtime issues. You have wrongful termination, age discrimination. You have sexual abuse and molestation claims. Sexual harassment claims. So now you can even be sued by failure to hire, unfortunately.
So ELPI is for the employees?
It's if your employees sue you as an employer. That you don't have coverage for unless you buy it separate and endorse it. So usually, and that's something that's one of the, I want to call it, those are kind of like the hot spots that are happening out there. Like the slip and falls have gone away. Now with cameras everywhere, you don't see that anymore. That used to be the thing back in the day. I slipped and fell. Not everybody has a camera phone reporting. Now what they're doing is they're going after, because not everybody has that coverage. So what happens is you kind of get these, unfortunately, these mafia attorneys, what they'll do is they'll send you a demand letter, asking for $15,000 or $20,000, saying, because they have an ex-employee that they were wrongfully discriminated based on age, you let them go. So do you hire an attorney and spend $15,000, $20,000, or do you write them just a check? So that's what they're doing now. That's kind of like that's the hot spot out there, and unfortunately.
And you guys see that often in
Yeah.
Miami?
All the time. Nonprofits, not as much. We see it it's every day in the hospitality industry, all the time. Nonprofits, no. It really depends on the nonprofits, because it picks up even volunteers. Like it's a real. I mean, we have a nonprofit who another one. I'm not gonna say the name, but they do travel overseas, Latin America. They do a lot of great charitable work. Now they had an issue with a volunteer, so that's another part. You start growing. Like, how do you keep control? You have boots on the ground. Then you have volunteers, and then a volunteer was accused of some inappropriate actions to somebody else. The insurance company had to defend the actual nonprofit and the entity. Something completely out of control. It was something that was there just for one trip.